Thank you for having me.
So what's going on? What's happening right now? So should people be freaking out is the question.
I wouldn't freak out. Now, keep your head on, chill, as they say. I don't think this is something that's long term. The economy's doing great. GDP is growing. Jobs are created. It's ironic that we had good news and the market interpreted it as being bad news. A lot of this has to do with computer trading. Algorithmic trading is heading us down, bringing the market down pretty hard. But I don't think there's anything fundamental wrong with the economy or the market. So use it as a buying opportunity.
Just to help underline your message, I think we in the media, okay, perfect. I'm glad we showed this shot. We see that minus 1175, and I think people panic. But put it in perspective, percentage-wise, we're not even close to the biggest drop ever, right?
Oh, correct. I mean, this is not even the top 12. I was here in 1987 when the market dropped 22% one day. A year later, everything was gained back. So if you just held, you were fine. And if you bought, you made a lot of money. So you got to look at it. Every one of these types of scenarios that has occurred in the past, just look back. Everyone was a buying opportunity. What we don't know is this the bottom today? Is it tomorrow? Is it the next day? But understand, this is the best economy in 10 years, growing at a very fast rate, and wages are increasing. Things are good. So let's not panic and get caught up in this short-term trading mentality.
You mentioned computers are sort of generating this thing. In other words, people are not calling their companies and their management companies and saying, sell this and sell that. This is not that.
I don't think that's where the volume is coming from in general. No, I received one call to do that. I had a lot of calls asking me what to buy. So when I get back to the office today, when I've been here, I'll be going in and buying for clients at that point. But I'm not worried about it. The economy's doing really well.
Sometimes, though, patience does run out. People do say enough is enough. I've accumulated a nice little retirement fund here. If we are going to leave, I understand the 10-year Treasury is now looking a lot more attractive. Do you foresee bonds becoming, especially given the volatility in the markets right now, becoming something that more people go to sort of to escape this volatility?
That's one of the arguments that the reason the market fell because bond yields went higher in the 10-year up to 2.85, heading to 3.
3%, yeah.
So I don't understand. If 2.7 is not attractive, 2.85 is that much more attractive, or even 3%, you got to time your money for a decade to get a 3% taxable rate of return. That's a little ridiculous. After taxes, after inflation, you're breaking even. Do you want to tie your money up for a decade at that point? It's more of a fear trade. People will buy because they're afraid it's a U.S. Treasury. But if you're a long-term investor in a retirement plan or just looking for growth, don't worry about day-to-day, week-to-week fluctuations. Look for opportunities. Stay with a plan. Don't veer from it, and don't panic. Most of all, just chill. Everything will be fine in the long run.
You know, at what age should people start to be thinking about, I got to get out of this and I got to start moving some of my money into something that's a little more safer? What is your general rule of thumb for people?
As you approach retirement, if you're over 50, what have you, you should be been planning for years, hopefully. As you get closer to retirement, you start to really, as I said, you don't try to time the market, you try to time your retirement. Make sure that your assets are more conservative the older you get, depending on where you're at and the net worth that you have. So sit down and develop a plan. When I do that, we sit down, determine what you need in retirement, how much money, where you're at today, where you need to go to get to that level of income to generate it. Of course, interest rates are record low levels. They will go up, not by a lot. So just plan every day. Don't wait till you're 64, wanting to retire in 2 years, and say, I think I need to start doing something. That's the biggest problem. I don't see people planning enough in ahead and determining what their ultimate investment goal is to achieve what their retirement is.
So 55, though, that's kind of like the time where you say,
well, again, most people, you retire at 65, and now you live to be 85 or 90. So it used to be you retired at 65, passed away at 70. You didn't have to worry about it. Now you have 20 years of retirement.
Stephen Esposito, thanks so much for coming in this morning.
Thank you.
Calming us all.